Hi students, welcome to AR Accounting. Today we are going to start paper 2-1 of May-June 2025. We move to the question number 1. In question number 1, we have to make an opening journal entry of the given data. Okay, we are provided with the balance of uh, liabilities and assets, and we have to make the opening journal entry for this business. Narrative is also required. We see what the items are given. Anika started a business on 1st March 2024, but she did not start to keep full bookkeeping records until 1st March 2025. Anika's assets and liabilities at 1st March were uh, we are given the assets and liabilities balances. Okay, now we see that which of these are assets and which are liabilities. uh, Premises asset, motor vehicle asset, inventory asset, trade receivables, two trade receivables are given assets, and then petty cash balance is asset. Bank overdraft is liability. If simple bank would be given, then it is an asset. If bank overdraft is given, then it is liability. And trade payables also liabilities. Ado and Sam, these are the names of our two suppliers. These are also liabilities. Okay, now we have to put them into the journal. Okay, all the assets have debit balances. All the assets have debit balances, and all the liabilities, on the other hand, all the liabilities are with the credit balance. Okay, they appear according to their balances in the journal, and you can see the journal date, detail, and the first column will be of debit entries, and the second column will be of the credit entries. The amount of debits, respected debits and credits, will be shown in these columns. Okay, now we see it is of 4 marks, and we see its solution and the distribution of marks, that how to attempt this part A. Here we have its solution. You can see they have written, first of all the debit entries. All the debit entries are written. See, premises, its amount in the debit column, motor vehicle asset, amount in the debit column, inventory asset, amount in the debit column, then trade receivables, coffee and devia, they are also appearing in debits. Okay, then petty cash is our asset, that the amount that is left in the petty cash right now, or the balance of the petty cash book, it is 86. It is also our asset, current asset, and they all are shown in the debit column. Then the credit entries. Bank was overdraft. Overdraft can be written with the bank. Okay, it is coming in credit as it is a liability. Trade payables, Ado and Sam, these are two trade payables. Their amounts are also written as they are liabilities. Trade payables are the current liabilities of a business. They are written in the credit column. And the capital was not given. See, capital was not in the list. You can see again here in the question that capital figure is not given, but we are also writing capital because the reason is that the total of the debit is not coming equal to the total of credits. We have written down assets and liabilities, but the credit total is short. Okay, what we will do now, before writing capital, we will do the sum of debit column. Okay, these all will be added uh, to get this value 113,351, and then these values, the given values, okay, this block, this will be subtracted from this figure. Which figure? The total of the debit column. uh, in the calculator, what we will do, we will write 113,351 minus 1080 minus 1925 minus 210 means they will be subtracted. Subtraction. Remember, because we have to find the capital balance. Okay, when we will subtract these, we will get 110 136. This will be the value of capital. It is not given, we have to calculate it. Okay, I also write that a note here that capital will be equal to capital will be equal to total debits total debits minus total credits. This is how you will get the capital amount. Okay, now you can see there are 4 marks rewarded to this question. Okay, how you will get 4 marks? You are getting only 1 mark for all these. Okay, writing all the debits, only 1 mark, and then writing all the credits, 1 mark here, then finding capital, 1 mark. Okay, and then in the end, this is the narration. They also asked you write a narrative assets, liabilities and capital this date. Mean this narration or narrative tells us that what we have done in the journal entry. It is a short summary of our journal entry narrative. This is called narrative. Remember, sometimes they ask you to write narratives, sometimes they write narratives are not required. Okay, you have to read the question statement carefully so that you should know that whether narrative is to be written or not, because if the narrative is required, one narrative for each journal entry is required, and it contains 1 mark for each narrative. Okay, in this way we will be able to get 4 marks for this part A. Okay, now we move to the next part of the question, that is part B. In part B, they are asking, Anika decided to maintain a petty cash book using the Imprest system. The impressed amount is 150. Impressed amount is 150. 150 impressed amount means that every month business gives $150 to the cashier to meet all the petty expenses. Okay. On 1st March 2025, Anika drew the amount required for petty cash from the bank account. Amount required. Anika drew the amount required. How much amount was required to reload or to you can say to make the 150 on the debit side? uh, we see it in a minute. Okay, for petty cash from the bank account, Anika has withdrawn from the bank the amount required to be started in the 1st March. Okay, now if we see this account has a link for the petty cash in the part A, this has a link for, over here in the given data before part A. Here we can see the our petty cash has 86 balance. Petty cash has a balance of 86. It means our petty cash contains this $86 on this date. 1st March, our petty cash book contains $86, but we have to make it $150. Now we see that how we will do this reloading or refilling of our petty cash. All these transactions are given. These are the payments made through the petty cash. Okay, they are asking prepare Anika's petty cash book on page 5 for the month of March 2025. Balance the petty cash book and bring down the balance on this date and restore the imprest. Okay, these are the requirements, and then we are given the format of petty cash book, and we have to fill this petty cash book columns, and it contains 11 marks. 11 marks, students. Sufficient marks. Almost more than 50% of the marks in this question are of petty cash book. Now we see that how we will start the petty cash book and how will we enter these entries, all these payments into the petty cash book. See, Here is our solution of petty cash book. Okay, we see the things one by one. Okay, first of all, we started with the balance BD. This is 86. We will write it as balance BD. It was given, okay, in part A, given in part A, this 86 we have written. But we start every month with $150. Now we have to make total 150 on our total received side, because our month is starting. We need 150 in our pocket, in our petty cash book, to go through this whole month. So from the bank we will put 64 more. Okay, from the bank we will put 64. What we have done over here, we have reloaded, we have refilled our petty cash over here, according to the impressed amount. Because 150 is our impressed amount. It is also called float amount, float or impressed amount, float or impressed amount. Okay, now we have, on 1st March we have $150 on our receiving sides. Okay, after that we see these payments: paid for petrol, paid for computer paper, paid sam 48 on account. This is different than the others. Paid for postage, paid for cleaning. And in this petty cash book format, students, you can see the columns: total received, date, details, total paid, and then motor expense, office expense, and ledger accounts. From here till here, we have these columns. These are called analysis columns. Analysis columns. On the payment side, we write every entry in two columns. First, the total paid, okay, and then the respective analysis column. That these columns tell us the types of expenses that we meet with our petty cash. First of all, we bought the petrol for $30. We paid for the petrol $30. First of all, we will write it in total paid column, then motor expenses 30, because fuel is related to motor expenses instead of office and ledger accounts. Then computer paper was bought, and it will go in total paid first, and then in office expenses. Then we paid to Sam. Now Sam is our supplier. Okay, if we have to make a payment to our suppliers, then they will be written in the ledger accounts. Okay, their respective column of all the suppliers go is ledger accounts column. Okay, we wrote 48 over here, total paid first, and then in ledger accounts 48. Then postage was paid $6, and postage, it is an office expense. Then car cleaning, and it will go in motor expenses for $8 and $8. That's all. We have done all the entries, all the payments, okay, on in our total paid column and in the respective analysis column. Again, I am repeating that on the payment side you have to write each transaction's amount in on two places: first the total paid column, and then the respective analysis column. After that, what you will do, students, you will sum these columns. Okay, take a total of ledger account 48, it is coming 18, 48, 18, 38, and total paid is 104. Okay, after now we are done with putting all the entries. Now we have to balance off. The next step of the petty cash book is balancing off the petty cash book. How will we do it? Now we will see this column total. For balancing off, we compare these two columns, total received and total paid, for balancing off. Remember, for balancing off purpose, these two columns are compared, analysis columns are done. Okay, we will not do anything more with the analysis columns now after putting transactions. Then for the balancing off purpose, we use these two columns, total received and total paid. We compare both of them. Now you can see the total received total is 150. We will write its total here, and in the same line you can see, in the same line, same row, we will write 150 on the total paid side. Then we will subtract 104 from this 150. It will be subtracted. What is the difference? 46 is the difference. Means our total paid side was $46 short than the total received column. So this 46 will become the balance CD. We will write balance CD in front of this. We will not write anything in front of 150, the totals. In balancing off, the totals are not labeled. Nothing, no details come in front of the total figures. Then what we will do, we will brought down now balance CD. This is written on 31st of this March. Then after March, April comes. On 1st April, this 46 will become our balance BD. Now this 46 is to be shifted here, and this is balance BD. On this date, 46 will be written in this total received column. Okay, balance BD will be shown on total received column. Then now we have balanced off our petty cash book. Okay, the next step in the requirements was they were asking to restore the petty cash book on the 1st of April. Okay, how to restore? Simply subtract this balance CD from your impressed amount. Okay, means 150 is our impressed amount or float amount minus 46. 46, it will be 104. Means we need 104 more dollars to make total. Now this will both of these figures will make $150. Okay, and this 104 is, this is restoration. This will be called restoration. We have restored our petty cash book with the required amount. Means we will take this money from our bank account and we will put it in petty cash. This is restoration. Okay, now you can see the division of marks in this 11 marks question. 1 mark for each transaction. Okay, and then 1 mark for all the correct dates. You can see the dates of these transactions, and 1 of totaling analysis column. Okay, if you total these analysis column from here, you will get 1 mark. This is how the marks have been divided between different steps in the petty cash book. Okay, now we move to the next part, part C. They are asking in part C, on 21st March, Anika purchased goods on credit from Sam. List price 120, subject to a trade discount 5%. On 25 March, Anika returned half of these goods. Prepare the account for Sam in the books of Anika for March 2025. Balance the account and bring down the balance at 1st April 2024. 25. Okay, two names are written now here, Anika and Sam account. Means Anika is the, here Anika is the customer and Sam is the supplier. Okay, Anika is the owner of the business whose accounts we are preparing. Okay, and we are preparing the account of Sam. Sam is supplier from whom Anika buys goods on credit. Okay, before making account, you have to make it clear the relationship between these two persons or these two businesses. It's very important, because if you forget, if you uh, if you don't understand the relationship between these two businesses, it is very obvious that you will make mistakes in the account. See, this account is of 5 marks. Now in the Sam's account, students, in the Sam's accounts, we have to make all the transactions related to Sam. And in this question, from where Sam started, Sam's Sam started in the part A. Here we can see the name of Sam given 210. It was liability on this date, 1st March. On 1st March, it appeared in our books that we owe $210 to Sam. Okay, then What happened in our petty cash transactions? There was also a transaction about Sam that we paid. This one we paid Sam $48 on account, mean the money we have to return him. This was returned on 17 of March. Okay, then after that uh, here in this paragraph we are also provided some of the information related to Sam, that we are purchasing, Anika purchasing uh, some goods from Sam, list price 120. Okay, and a 5% trade discount, and on 22 transactions are given. One is of purchase, this is of purchases, and this one is of purchase return, purchases return. Okay, uh, now we have, before making these entries into the account of Sam, we need to calculate that what amount we will enter into the account. When we buy goods 120 and there was a 5% discount, multiply by 5 over 100. Okay, uh, 60 but 10 means $6 was the trade discount. Trade discount is simply subtracted from the figures, and the amount coming after the trade discount is recorded in the ledgers. Okay, now how much was our purchase? 120 minus 6, the purchase was $114. Okay, this amount will go in account of Sam, in account of Sam for the purchases. Okay, then they are saying that this return, half of these goods were returned, half of these goods were returned. So 114 divided by 2, this is return, mean $17 were returns. These were the purchase returns. Okay, now we are clear with all the transactions to be posted in Sam's account that contains 5 marks. We see how these transactions go, and which transaction will go on the debit side, which transaction will go on the credit side. Let's see the account of Sam. Here students, see, first of all, we started the first transaction. I will number the transactions, okay, that which transaction will come first. First of all, the opening balance of any account is entered in that account. The balance BD 210. Why on it is coming on credit side? Because Sam is our liability, and liabilities have opening balance as debit. Liabilities have debit. Sorry. Liabilities have credit balance. Liabilities have credit balance. That's why this balance BD will come on credit side. Now we will move on date wise. Okay, after 1st March, then there is an entry of 17 March, that we paid through our petty cash. We paid $48 to Sam. It means we will debit our debit Sam's account and credit petty cash. So on the debit side we are debiting Sam's account, transaction number 2. Okay, then we are crediting petty cash and debiting Sam account. After that, after 17, there is an entry of 21. Okay, see the order of the dates of these transactions, please. On 21, we made purchases of $114. Purchases list price was 120, but $6 trade discount, and this we are putting the amount after trade discount. This is the third transaction to be put in Sam's account. After that, there were purchases returned. We returned half of these goods, half of these good. So Sam will be debit and purchase return will be credit. Purchase return is crediting against Sam's account. That's why Sam's account is getting debit, and we are writing this purchase return on debit side. So number fourth transaction, $57. Why 57? This is the half of 114. 57 is half of 14. Okay, then there is no more transaction, and we just have to balance off this account. Then on credit side there was 324, and on debit side we were only two figures, 48 and 57. That's why 324. First of all, 324 will be written on both sides. This is fifth step. Fifth step in making your SAM's account, that you will write 324 on both sides. Then from this 324, these two amounts will be subtracted. 324 minus 48 minus 57 minus subtracted. Why? Because we want the balancing figure. We are going to balance off Sam's account and we get 219. This will be called balance carried down, balance CD. This is our sixth step. Okay, sixth step in making Sam's account. And then this balance CD is brought down on the first date of the next month, April 1. On the balance BD goes on the opposite side of balance CD. Wherever balance CD is coming, if it is coming in on a debit side, then balance BD will be on credit side. If balance CD is coming on credit side, then BD will go on debit side. They always go on opposite side. And this is the seventh step of our account, Sam's account, that how we will enter transactions, which transaction will go in Sam's account step by step. Okay, now students, you are clear about making the account of supplier, a liability account, that how we make this account, that how these transactions are put into the account, on which sides they go, and how to balance off the account. Okay, and now we see the marks division of Sam's account. See, 1 mark for balance BD, 1 mark for writing purchases, 1 mark for petty cash book, and 1 mark for, and this is 1 mark for a purchase return of own figure. Own figure mean if even your amount is wrong. For example, you write over here 60, 57, instead of 57 you write 60. Even then you will get this marks, because the examiner has put OF, own figure marks, for purchase return. But one thing, if you write purchase return on credit side and you write 57, then you are not going to get mark. Okay, its side should be correct. First of all, the side of purchase return should be correct. And if your amount is wrong, then you will be eligible to obtain this mark. Otherwise, you are not going to get this own figure mark. Okay, then one mark for the balance BD. Okay, this is also for own figure, means your, if your calculation gets wrong, you do not get 219 exact, you get some other number. You have done some calculation mistake, but you have written your balance BD over here, whatever is coming in your calculations, you will be given this one figure mark. Thank you so much, students. I hope you have got this question clearly. Now request for subscribing this channel so that you can get the coming videos of explanation of past papers and the lectures of accounting, IGCSE, O level and A level. You can get the coming videos. Press the bell icon. Thank you so much.